Hi, everybody. Happy New Year. I hope that everybody had an absolutely incredible New Year. And we are back, 2019. I seriously cannot believe that it is 2019. We will see what the markets have to hold. And Tyler's going to be extra bold this year. Not that he wasn't last year, but on predictions, not just of Bitcoin, gold, silver, dollar. We're going to have a lot of fun and be real obnoxious this year. So one thing I did want to say, and I'm actually going to evoke Tyler on this one a little bit, is proof of keys is tomorrow. Rodolfo, huge shout out. I don't know if everybody can see. It says Satoshi Run. That is tomorrow. And what I find very interesting about it that's related to what we always talk about is just the values behind it and what it is specifically. Now, what it is specifically is it is really a bank run on exchanges. So if everybody watched, Trace Mayer, he was specifically encouraging people to withdraw all their Bitcoin and crypto from third-party crypto exchanges. And the reasoning is interesting. The reasoning is twofold. On the one hand, it holds exchanges accountable. Right? It's one way that we can prove that the cryptocurrency exists on the blockchain and that these exchanges are actually in possession of all of the users' deposited cryptos. On the other hand, also, it's philosophical. And at least Mayer argues that it's monetary sovereignty, but specifically to ensure accountability from third party. So yes, I look like a boy, but that's also because, thank you, Crypto Stoic, this is the Genesis block, and proof of keys, obviously, tomorrow is Bitcoin's birthday. So I will stop there. But again, it's just, to take control of your keys, but specifically to hold this system accountable that, as we always talk about, has a little shadiness, but also celebrate its core values of Bitcoin's birthday. Okay, I will stop rambling. Tyler, how was your New Year's? And are you excited for Proof of the Keys? I know I'm shilling everything possible here.
No, absolutely. I'm actually very excited about tomorrow's experiment in terms of proof of keys and the Satoshi Run. I have no idea what it's going to do to prices. It could do something to prices, but I don't know. It'll be interesting. We'll take a look at a Bitcoin chart today. Then Leah and I are going to do a vlog tomorrow specifically about the proof of keys and Satoshi Run, what it means. Rodolfo this morning was talking about the importance of tradition, and we don't have a lot of tradition in this short-lived Bitcoin space, but a number of things have developed and more are developing. Let's hope that this is one very important tradition that gets started tomorrow, from the perspective that it's so important to remember that the significance of the Bitcoin experiment is that every individual retains the maximum amount of ownership of their life. That's the philosophical side of it, which means decentralization, decentralization, decentralization. We've gotten to the point that we have arrived at through centralization, centralization, centralization. And those of us that believe that Bitcoin is a possible and maybe probable answer to the question of centralization has to be tested at all levels. And tomorrow is testing it at a level most people didn't think about, which was having to do with exchanges and who really owns your Bitcoin. And we will see how it starts out. But hopefully a year from now, when it happens again on the 3rd of January, and every year after that, there will be more and more participants. And what that will do is that will establish the necessity for exchanges to become less and less centralized. And we already know what the maximalists, including Leah and myself, believe about the centralization of ICOs and every other project with the altcoins other than Bitcoin. So I'm all for it. I think it's very interesting. We're going to be doing a lot of things in the next couple of weeks. The next tradition I just wanted to mention is a shout out to Tone Vase in the Unconfiscatable Conference. It's not just a conference, it's a conference about Bitcoin. And it's a conference about what makes Bitcoin different than all these other projects. And this is the first one this year in about 3 weeks. And I know there will be ones every year after this, which will keep growing and growing in importance. So there's a lot of things in the works, very exciting times. Today, we're going to talk briefly about Bitcoin and my disinterest at the present time in the price activity, but we will take a look at it. The main thing I wanted to talk about is a tweet that I sent out this morning that I'm preparing my clients and our consulting clients to watch out for the potential of a big shift in the dollar strength and the weakness in precious metals. So we're going to do a deep dive into that this morning. And I'll start out by saying I don't have much evidence at this point for what I'm saying. In fact, much of what I'm saying runs counter to many of the technical tools that I use. And I'll try to explain why and how I'm actually overriding Consensio in order to make this call today. So let's get right with it by doing some screen share. We'll start with Bitcoin. And while I'm doing that, Leah, if you could just give a shout out to the Unconfiscatable Conference in our workshop and what people need to do to get on that. It is filling up quickly, and I hope people aren't waiting for Bitcoin prices to drop before the 3-week period is up to get in, because I think you're going to get left out in the next 5 to 7 days, because we cannot take any more than 50 people and there aren't that many more spots. So while I'm doing this, if you could just talk about that for a moment.
Absolutely. Also, hopefully not everybody jumps off our show, but Tour Demeester is actually on with Tone right now. Apologies to the morning brief crew, but that I'll definitely listen to that later. Okay, lucidinvestmentstrategies.com. We have our workshops. Unconfiscatable is going to be amazing. Register right here. Schedule is right here. And yeah, we were able to get now 50 seats rather than we had 30, but this actually isn't even accurate. There's been a bunch more people that signed up with Bitcoin, but I was not next to my ledger, and therefore I was not able to verify. So those will be committed today. So yeah, so it's going really fast, and that's really fun. Ask me a question. Is that online? But yeah, Tour's on. That's going to be really interesting. He had an epic tweet storm about Ethereum. If everybody missed it, he is absolutely brilliant. And it looks like Tyler's up. Okay, I'll stop talking.
Okay, thank you. And we're going to start with Bitcoin. We're going to start with Consensio without the prices of Bitcoin, just to show you why I'm saying I'm uninterested right now in pricing. I do think we're going down to 1,000. I do think it's going to be very difficult to get back over 4,200. I do think that we will find support between 2,800 and 3,200 for a short period of time. But right now, what you're looking at is the long, intermediate, and short-term moving averages of the price. The short term has come up and met the intermediate term, which is moving down. And this is in a full bearish posture. And until we break down below the old lows around 3,200, it to me is fairly uninteresting. I'm not going to spend a lot of time. I will put the price back up just very quickly so you can see why the short term has moved up over the last 3 weeks, but is not really going anywhere. So it's just a matter of sitting and waiting. There are many more interesting things going on in the world of investing right now. Bitcoin is going to have its day, and it's going to be tremendous. I will be publishing an important study on the long-term price of Bitcoin in Medium, probably by the end of this week. I won't give anything away, but I think it will have some very interesting information about how high the price of Bitcoin can go after we get rid of this mess that we're in right now. Okay, with that, I am going to switch over to some very long-term charts, starting with the price of gold. And what you're looking at here is the spot price of gold from 1970 to the present. 1970, we're locked down at $35 an ounce before Nixon closed the gold window in 1971. And we see this tremendous run up to $800. And then this very long period of time from 1980, 79, 80, all the way to the lows, which occurred at about $250 an ounce in the early 2000s, 2002 going into 2003, before we reaccelerated up into this tremendous bull market that took us from $250 all the way up to 1900. We are in a bit of a correction, which to me is beginning to look similar to this back in the 1979-1980 period. The fact that we have broken this uptrend line is very suspect to me and is disheartening, because I believe that gold prices can go much, much higher depending on the macroeconomic situation and depending on Bitcoin. But let's just focus on this period from 1900 down to 1100, back up to 1380, and now this, what people are saying is this bounce that we're seeing at the end, which has not impressed me. And that's what we're going to go into in detail in just a moment. Let's take a look at silver over the same price period, 1970 to the present. And you see a similar chart when gold was unhinged from the dollar. Gold quickly went up and silver went up. Silver in this case ran all the way up to over $40, and then came all the way back down to the $4 level before moving all the way back up and double topping almost precisely at the old highs. Now, silver has been underperforming gold since those highs. Go back to the gold chart. you can see the slight drop from $1,900 down to $1,100 compared to the much larger drop in silver from its peak at 40, actually interday got up as high as $48, but let's just call it the $44 close on a monthly basis, has dropped all the way back to 13.25, and it's been messing around there ever since. Now, there are a lot of people that are measuring gold against silver in terms of the conversion rate between the two. I don't believe that's any longer a particularly important variable. I think silver will continually underperform gold from here on out. I'm not as negative to silver as Safedine and Tone are. I believe they will still be linked. And if and when gold goes on another very large move to the upside, silver will go right along with it. And I don't mean percentage wise, I just mean the direction will be the same. But that's also true on the downside. Now, I just want to look at one other chart, because what I'm going to be doing today is talking about my belief that the dollar is about ready for a very large move up. And I'll explain how I'm defining that as we get deeper into this. But for right now, I just want everybody to remember, I did a piece on the Kaiser report not too long ago, and then I was happy to see that yesterday on the first of the year, Max and Stacy do a prognostication video. They're going to be doing a number of them where they talk to different people who a number of weeks ago had made prophecies about what various asset classes will do in 2019. And during that show, I said that I believe the dollar could go much, much higher, and that gold and silver would go much, much lower. It's way too early to make that call, although I am sitting up on the edge of my chair about some recent developments that could mean that this is closer rather than further away. But take a look at this gold chart from the perspective. One of the comments I made on the Kaiser report was that for the last 20 years, we are now just midway between the highs and the lows. A lot of people think or have lost track of the fact, because we've had such a big move off the bottom here in the dollar, that the dollar must be very high. That's historically not true, and you can tell very quickly by looking at this chart that it is not true. We were much higher back in the 00 period, and much, much higher than that, as you see back in the beginning of the 1980s. So for us to challenge this peak, which I think we can do, and we are about to do, is not a theoretically difficult concept to grasp. Okay, that's the overall general picture. Now let's look at some specifics. What we're looking at now is the dollar on TradingView, but measured as the DXY. And it's important to understand the limitations of the DXY. The DXY is a dollar index made up basically of 6 other currencies that the dollar is measured against. And those currencies are heavily weighted to the euro and European currencies. 57% of DXY is designated in euros. So one of the things that this recent action shows, and this is a monthly chart, so we're looking at the last year of the dollar climbing stronger and stronger against that basket of currencies. And now, from a consensio point of view, is in a very powerful position to move sharply higher. And those of you that don't have a background in consensio, I'm not going to take time to explain it all, but basically the price action has moved above the short, intermediate, and long-term moving averages, which in this case are the 3-month, the 7-month, and the 30-month. And they've pulled back a little bit, but only to very strong support. And I believe if you take a look at the stop and reverse points below the dollar for the last year, they're very powerfully moving up. You can see the Copic curve on a monthly basis moving up off of this same bottom, giving a big buy signal well below the 0 line. So there's just a number of technical things that I look at that have me interested in the dollar. Now, besides 57% in the euro, there's 13.6% in the Japanese yen. There's 12% in the British pound. There's 10%, 9% in the Canadian dollar. There's 4% in the Swedish krona, and there's 3.6% in the Swiss franc. Now, some people will say, yeah, but that's all Eurocentric other than the Canadian dollar, which some would argue moves with the pound sterling in some senses, both politically and economically. But we also have almost 14% in the Japanese yen. But why were these chosen in that basket? Well, the answer is very simple. If I give you a list of the 6 most widely used in terms of transfer of payment currencies in the world, they are these 6. By far, the biggest is the US dollar. The second is the euro. The third is the Japanese yen. The fourth is the British pound. The fifth, believe it or not, is the Canadian dollar, and the sixth is the Swiss franc. So that DXY is put together by those currencies, not geographically together, but those that are the most widely used in the world. So I like the DXY, and I do a lot of my correlative work in terms of what precious metals do relative to dollar prices, and also what the US stock market does to US dollar prices by using the DXY. I also look at a lot of other currencies, but for today, let's just stick with that. Okay. Now what I'd like to do is I'm going to pull up some gold prices. And we'll start with the XAU US dollar. Now, the reason I said I'm jumping the gun here is because this looks like a pretty good uptrend. I'm going to switch from monthly back to weekly. Notice, however, before I do, that the monthly long-term moving average is still moving down. Notice also that the Copic curve is moving down, although flattening out on a monthly basis. On the weekly, it looks far more bullish. That's why I started with the monthly. I want to keep a very long perspective. We've just looked at charts going back to 1970 for gold, silver, and the dollar. So now we're going from multi-year to multi-month, which looks negative. But the weekly is looking very positive, no matter how I look at it. So I'm sure it seems strange to a lot of you that I am calling for a reversal in gold prices and silver prices at these levels. I don't have the evidence for that yet. So this is a premature call. And notice that the stop and reverse points are very positive. Consensio is very positive with price above short and above intermediate, which are moving down. But the long term is still struggling. I think what we might be looking at here over the last 6 weeks is a massive bull trap. And I've got examples of this happening in the gold and silver market on a number of occasions going back many, many years. Now, some people believe it's because of the manipulation of the gold and the silver market by large banks and by central banks and others. And I'm not going to comment on that. I'm simply going to make the comment that when things look short term very bullish or very bearish in the precious metals markets, you've got to be very careful about becoming too exuberant to the upside or too dismissive or discouraged to the downside, because you might be setting yourself up for a big trap. Let's take a look at silver prices. Silver prices, as I said before, are not as strong as gold prices. And I made some comments about that, but I just wanted you to see the difference between the silver long-term moving average moving down steadily, even though price for 2 weeks now, or a week and a day, a week and 2 days, 3 days, is above it. The intermediate term is not yet above the long term. And it wouldn't take long for silver to reverse its position very quickly. Notice also that on the Copic curve, I'm going to go back to the monthly for a second. The monthly is flattened out, but is still in a downtrend, although this has definitely slowly turned up. So if I'm going to be correct, and we're about to head to the downside again, it needs to do it in the next week or 2 weeks before silver prices can get back into an uptrend. Part of my conclusion is that silver prices have outperformed gold prices at various points in the last 2 years and underperformed at other times. And when silver is underperforming gold and one other condition exists, which is the mining companies, the gold mining companies are also underperforming gold bullion. those two things together have often led to reversals from uptrends in both gold and silver. So to get a better sense of what I'm sensing here, I want to take a deep dive into the gold mining companies. And what we're going to do is we're going to look at the GDX, which is the Van Eck Vectors Gold Miners. And we're going to look at not only the overall ETF, but we're going to look at all of the major components of that ETF, mining company by mining company. And we're going to do the same thing with silver to get a better sense of what's going on with the corporations that depend on gold and silver prices for their profitability. Okay. What you're looking at now is the monthly chart of the GDX, which is made up of, I'm going to say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 major and minor companies as the largest holdings of that ETF. And what you see on the monthly basis here is almost 4-month rise. We're into the 5th month. We still have not broken above the stop and reverse points. We still have not broken above the descending long-term moving average. So we have arrived at a critical juncture. And that critical juncture is either going to break to the upside or get turned down to the downside. And right now, my sense is the probabilities favor a turn down to the downside. And we'll look at the individual members to come to some kind of conclusions together about that. I'm going back to the weekly. And sorry, I'm going back and forth and over various time frames, but that's the way I analyze everything. I start with the longest trends, and then I continually shorten until we look at what we're talking about right now, which is just the immediate history. Okay, notice what has happened over the last 2.5, 3 weeks for the gold miners. They've completely flattened out with the long-term moving average continually moving lower. So it's make or break time, but clearly this chart compared to the gold price chart is easy to see the underperformance of the gold miners. Back to the gold price, back to the gold miners. Okay. Let's take a quick look at the individual constituents of this particular ETF. So we're going to pull up in order these miners. This is the AU, which is Anglo Gold Ashanti Limited. And you can see it is fully bullish and moving up even more than the price of gold. So that's one. Here's two. This is Kirkland Lake Gold, doing about the same thing and even a little bit better than the price of gold. Notice the long-term moving average has been moving up through all of this. If I was only buying two stocks and forgetting that they're gold mining shares, both AU and KL I would be long those stocks. But we're not talking about individual stocks. We're talking about a group of stocks in a particular ETF. So let's keep on going down. This is Goldcorp, which is an enormous company. And notice how it is underperforming dramatically. I'm not going to go into the details of why we're seeing the type of dispersion between the miners. That's unimportant to me for today's discussion. But notice that this is in a full downtrend, even though it's recently broken above its stop and reverse points, which had been going down, but Consensio is still a basket case. Let's take a look at Newmont Mining. Slightly better, looks more like the overall GDX. Long term is moving down. We are above the stop and reverse points. Critical juncture, possible bull trap. Agnico Eagle Mines, same position in my mind. We've got 3 weeks, 3.5 weeks above the moving average. Long-term moving average still moving down. We do have a cross here of the intermediate back above the long term. But until the long term gets in line, Consensio keeps you out of a large portion of X, where X is the amount you want to put into something. El Dorado. If you were in El Dorado, congratulations. Tremendous move last week into this week, up 400%. Not a bad day's work. It is in the GDX. So what we saw in the GDX overall as a portfolio has a couple of dogs and a couple of tremendous moves. This is the GLD, which is also held in the GDX. And it is doing just what you would expect when you remember what XAU, the GLDs, are looking almost exactly the same. The AGIs, another dog. This is Alamos Gold. KGC, better, but not great. We've still got a long ways to go. McEwen Mining, a dog. And I'm saying that relative to the ETF, relative to those parts of the ETF that are doing very well. But what's important is the dispersion that I'm showing you between the constituents of the ETF. Alamos again, McEwen, IM Gold, negative, trying to go somewhere and not really doing it, and Sandstorm Gold, positive, looking like the others. So a bifurcation is taking place under the hood of the overall ETF. And you can pull up other ETFs and do the same thing that I've just done. And that's always something you should do if there are many members of an ETF. It doesn't matter for the SLVs or the GLDs, but when you're talking about mining companies where there's hundreds and hundreds of companies, this is a very good way, by picking out an ETF that is very well run, Van Eck is very well run and has been for 4 or 5 decades. And therefore, the picks that they have are important picks in my mind. Okay. Now what I would like to do is I'm going to go back to silver miners, because we saw that silver was underperforming. And so I wanted to see what's happening with the mining companies on a real-time basis. And we'll start with Swiss Life Holding, SLW, positive. First Majestic Silver, working its way back to a declining long-term moving average. 3 weeks ago, broke above the stop and reverse points. Pan American Silver, trying to get back up to its stop and reverse point, trying to get back up to a declining moving average. Hecla Mining, a disaster relative to the gold mining shares, huge company, struggling, everything down. Core Mining, same thing. Endeavor Silver Corporation, halfway in between, long-term moving average moving down, 4 weeks above the stop and reverse points. iPath Pure Beta Broad Commodity, heavily weighted with silver. SPL Median, flat throughout this period, not looking particularly good. I'd love to get a chart of the largest silver mining company in the world, which is Fresnillo down in Mexico. But I wasn't able to pull a chart up. There was a change in ownership, and I'm not really sure, but I'd be very interested to see what that was. They have the largest deposits of silver in the world, and they're also the largest actual producing silver mining company in the world. Okay, so let me just get off screen share, go back to the overall principles going on here. Is it possible for the dollar to get stronger in gold and silver prices, along with oil prices, lumber prices, coal prices, zinc, tin, aluminum prices, to also go up? Yes, of course it is. Is it possible for dollar prices to go significantly higher in an intermediate or short term without turning gold and silver prices and a number of other commodity prices lower? I don't believe so. And that is the crux of my thinking as we sit here today. I don't have the evidence suggesting that people think seriously about shorting gold and silver today. What I'm saying is that if the charts you just looked at the dollar strengthening with what Leah and I have been talking about for months about the Federal Reserve and Trump's war with the Federal Reserve about not needing to continually raise interest rates because the economy is fine, but don't make it less fine, and the resistance of the Federal Reserve to back away from raising short-term rates. Remember that we are the American economy and the American Central Bank are the only ones actively raising interest rates relative to all the other major developed countries. Our rates have gone up significantly in the last 2 years compared to everyone else's rates. We're not talking about absolute direction, we're talking about relative movement. Therefore, the dollar has been strengthening for the last 2 years. And therefore, unless the world economy begins to accelerate, which I do not, and the IMF does not believe, and very few economists believe is about to happen, the dollar is relatively going to continue to be stronger. Now, there are people arguing convincingly to me that it's possible that we will actually get cuts in interest rates in 2019 as opposed to 1, 2, 3, or 4 more hikes. 4 is still on the board, but not probable. 3 is possible, but not probable. 2 is probable. And another one is almost a certainty by most measures. But that's important in the context of what all the other countries are doing with their interest rates. They've got to double their interest rates just to catch up with us at this point. If they're not doubling it, which they are not doing, they're not even moving them up, except in some very rare cases, incrementally, we still have negative interest rates in a number of places because they don't have the economic activity to support it. So the essence of my argument is not that gold and silver charts today are telling me that I need to short them, but it's a warning to me that those who have not yet gotten out of gold and silver positions in terms of bullion or coins, and particularly those that have not gotten out of mining companies or reduced their positions, reduced their exposure, might find themselves in a very difficult position in not a matter of months, but in a matter of days or weeks. And I don't have time today to go into the analysis of why I think it might be more imminent than the short-term charts are showing us. But we will do another show where we will go into that analysis having to do with what happens when silver prices and gold and silver mining shares begin to underperform gold bullion. And we'll take a historical look at that. And unfortunately, we have to get into the question of manipulation in terms of those markets, which we will do. Because as you know, I'm a believer that all markets are manipulated to one extent or another, and some of them are wildly manipulated most of the time. So with that quick overview, I wanted to send out the tweet and have this vlog today just to go on record as saying, be careful if you are becoming bullish on gold and silver and mining shares because of recent activity. It could very well be a bull trap, and it could be sprung very quickly. Patience, to me, is the most important virtue in investing. And then long-term charts come first, intermediate term charts come second, and the short-term charts which often are used by those that are significant players to convince others to get in so that they can get out of positions, or out so that they can get in, is the technique that's most often used. That's why we looked at the long-term charts of what moving averages were doing for not only gold bullion prices, gold mining prices, silver bullion prices, and silver mining prices. And with that, I will turn it back over to my partner.
To a honey badger.
Honey badger, yeah. Carrying a key.
We are carrying a key. Thanks so much, Tyler. Thank you, everybody, for watching. Maybe a fun little update is that thanks to Nick, actually, I am learning some day trading with his indicators that have actually really, really resonated with me, which Tyler and Tone have always said, learn your own system, learn what resonates with you and create your own trading system. So Tyler's agreed to day trade with me once a month to teach me, so that maybe we'll talk about that at some point. But day trade, swing trade, position trade, I'll have my own skin in the game, and we could talk about what we put in and all that good stuff too, so you guys can see how bad I am or how much I'm learning from the maestro. So I will put that on record too. All right, everybody, have an awesome day. Thanks so much. Thanks, Ty.
Great. Thank you all very much. Talk to you tomorrow.
Bye.